from ETCSEE 2022. I am Areti Daradimu, editor of Smart Energy International, and I'm joined here today by Mark Copley. He is the CEO of EFET, the European Federation of Energy Traders. Hi, Mark, and thank you for being here.
Lovely to be here.
So you just finished a plenary session here at ETCSEE, which was very interesting, and it was about the volatile markets and the lessons learned. So can you give us, in short, those lessons?
So it's very nice of you to say the panel was good. I was very grateful that I was moderating and I didn't have to answer some of the questions. So look, I think you normally do lessons learned when a crisis is over, and I'm not sure we're there yet. But I think there are a few things we've learned so far. If we look at the way we've worked to help Ukraine to synchronize that system, when we want to, we can do really big things fast. And I think there's a lesson there for the rest of Europe. Secondly, energy has never been more political. And this might be an obvious point, but I think we've learned that it isn't enough to just expect you can keep doing what you've always done. You need to recognize the political pressures that people face. And thirdly, and this is something several of my panelists said, the market's actually performed extremely well. You see real unprecedented conditions and the market delivering, yes, high prices, but contributing to security of supply, contributing to more competition, to integrating renewables. So I think they're the things we've learned, but we've also learned how little we know and how much we need to really think about how to tackle this challenge in a coordinated European way going forward.
And I think it's fair to say that although sometimes Europe is slow in responding in times of crisis, this time we did respond, and I say we, the collective we, yes, we did respond quite fast. Although you did mention one thing that is quite important, the energy prices. Those perhaps turn things a little bit difficult for those households that really can't afford to pay energy anymore.
Absolutely. So there's obviously an irony to a British person talking about a European response. I recognize that. Now, for 9 years of my career, I was an energy regulator. Yeah. So when I look at prices, the first thing I see is the challenges that vulnerable customers face. And so it's absolutely right that we work to help those. But one of the things that was very key when I was a regulator is you have to look after present customers and future customers. And the danger is you act now to help people, but you just load costs onto people in the future. And the European Commission did a very sensible toolbox, which looked at tax relief, energy vouchers, using ETS receipts. These were all sensible moves, particularly if targeted at the vulnerable. But then more recently, we've seen measures which distort the operation of markets. They scare investors. They lead, unfortunately, to higher costs in the long term. So I think when you're protecting customers, you need a balance. And I think at the moment, we're getting that balance slightly wrong. And I would like to see more of a focus on letting the market price work and then helping customers rather than suppressing the market price to try and help customers. Yeah. That sounds a little bit subtle, but there is an important distinction, I think, in there.
Yeah, but being realistic, cutting on Russian gas, how are we going to pay it in the future, and how ready are we? Can we actually do it?
So I'm not sure the can question is relevant. No. We have to.
Yeah.
And there are some extremely difficult challenges we need to deal with. I think there's an increasing realization that we need to think about demand management. We need to use less. We need to think about which industries we perhaps don't allow to use energy first, which is a really difficult decision. And again, as one of my panelists said today, what we're essentially going to do, I think, is see globally, we're all competing for the same gas. So whoever can pay for that gas is going to get that gas. And so we have to be very careful, I think, that in Europe getting gas, we don't create real development problems for other parts of the world. So, you know, we are, I think, doing the right things in Europe. We're working together a lot more, we're planning a lot more, we're thinking about how we diversify supplies, but it is not going to happen overnight. And I think, you know, were we to be in a situation tomorrow where we saw further disruption, we would find ourselves in an extremely difficult situation with some very hard political decisions that needed to be taken. So we need to use this as a spur for more close working, for diversification, for demand side management, and also for things like improving our flows in Europe from west to east as opposed to east to west and these sorts of things. So it's going to be difficult. I won't pretend anything else other than that.
But there is light at the end of the tunnel, let's say.
I mean, we're doing the right things in Europe. You know, look, if you think about what we're trying to do, we're trying to get to net zero by 2050.
Yeah.
Sorry, that's UK speak. Carbon neutrality. No carbon in our economy by 2050. That's a massive ramp up of renewable investment. And that's what you need to do, because it won't reduce gas demand to zero, but it will help because we will be burning fewer fossil fuels. If we continue with this market we've created, where we're sharing resources, where we're creating competition, where we're minimizing the amount we need, that is all going to contribute. Now, we've been talking about gas, and I'm moving towards electricity, but the kind of things that really excite me are things like offshore grids in the North Sea. How do we build things that allow huge volumes of offshore wind to really bring down our dependence? So I think you know, that is the things we have to do in the long run. And where I worry is we focus on security of supply and affordability, but at the expense of decarbonisation. Decarbonisation is part of the solution to the affordability and the security of supply we're seeing now, and I hope people don't lose sight of that. But unfortunately, this is a political world, and people like saying, the price is up, who shall I blame?
Fair enough. Let's discuss a little bit about flexibility. I would like to ask you two questions, basically. I will ask them together because I think they are connected. One, how can we achieve flexibility best way for our, let's say, collective needs in 2030, 2050? And if you see that the markets and the infrastructure between north and south, east and west in Europe are equal, or if somewhere we're lacking a little bit?
It's quite a big question.
Yeah, it is.
Let's have a think about that. Look, flexibility is, you know, it's this word you hear about all the time in conferences like this. But it's important, I think, to think about what it is, because are we trying to deal with an hour without wind or sun? Are we trying to deal with a week without wind and sun? Are we trying to deal with a season without Russian gas? You know, there's a whole load of things we need to do here. But fundamentally, I work for the European Federation of Energy Traders. I like markets and I like price signals because I think they lead to good decisions. Now, if you've got a market price that tells you the value of energy at a time and at a location, that allows clever people to make investments. If we know that the price is high here for a period or a season, we know it's low here, we can inject, we can withdraw, we can build a battery, we can develop those sort of things. So I think markets are absolutely key here, but also we need system operators to be being clear about what they need to manage systems with very high penetrations of renewables. And we need, as you alluded to, large amounts of cross-border capacity. I said I've been a regulator before. Last week, ACER came out with a report on the amounts of cross-border capacity available in Europe. It's pretty low. And we can make a complicated situation complicated, or we can make it very easy. The more cross-border capacity you've got, the better your market works. It's basically the same as having motorways. If your motorway has 2 lanes closed, there's a big traffic jam. If your motorway has 3 lanes and everybody's driving at the same speed, it kind of works. And that's where we are in Europe today. we need to make sure that cross-border capacity is used better. Now, if we have clear definitions of system needs, clear price signals, and lots of cross-border capacity, you will see investments in flexible technologies. I am sure of it. Now, this crisis we're in has a lot of negatives, but actually, if we think about those prices, I can guarantee that some extremely clever people are sat at home thinking about how they develop new technologies to take advantage of those prices. So we've also got to recognize the value of innovation, which will come in helping to manage those price signals. So I have quite a lot of confidence that we will see a wave of innovation coming from these prices, which isn't to say high prices are good, I hasten to add.
I understand. And in conclusion, I would say what you just said, that we are in a crisis, but this is also giving us, let's say, a push or a nudge to do some things, comes very much in connection with what the Greek philosopher Heraclitus said, that war is the father of all things. So let's just hope that this very unfortunate situation is going to get some nice things, some positive things for Europe. Thank you very, very much for joining us today, Mark.
Thank you so much.
And thank you for listening.